Good morning, good afternoon, good evening, wherever you are in the world. I'm Nick Massandrea from Market Tea Leaves, and I'm here to speak with Gavin Holmes, CEO of Tradeguider. Gavin and his mentor Tom Williams is a master in the fine art of market manipulation, meaning he's a pioneer in discovering and uncovering the truth, that being that the markets are being manipulated by the smart money. Now, for those of you who follow me on Market Tea Leaves, you've long known that I've written about this all the time. But Gavin, to his credit, has brought this to the forefront with the idea of making traders aware of what this is. I would also like to say that Gavin is probably the master of the bar, as I had the privilege of attending one of his sessions. And let me tell you, he could dissect a bar like no one I've ever seen. Okay, open, close, midsection, etc., you name it. That being said, I give you Mr. Gavin Holmes. How are you, Gavin?
Hello, Nick. Hey, thanks very much. I love the saying "the master of the bar." That made me think of the public house just down the road.
That's correct. You are from the UK. I
think let's just clarify that it's not the master of the pub; it's the master of the price bar.
Okay, there you go. There you go.
That's what I look for. I was taught to trade by a guy called Tom Williams, who was a former, as you mentioned, a former syndicate trader based out of Beverly Hills. In California over 30 years ago, and he actually worked for a syndicate that was able to move the price of a stock, because they used to trade stocks in those days, by using the news and using the media to influence traders to buy something while they were selling it, or sell something while they were buying it. And this is how the markets have always worked. And I wrote a book called Trading in the Shadow of the Smart Money, and you already mentioned earlier on there the smart money. Who are they? Well, they are the big international trading syndicates, the banks that we all hear about, even the governments could be classed as the smart money, because they actually have the ability to move price, and that's what we follow when we look at the price chart. Back over to you.
Yeah, interesting. So you were a police officer in the UK when you first heard of market manipulation. When you first heard about it, what were your thoughts?
Well, I didn't believe it. I thought it was a complete load of nonsense. I mean, let me just explain briefly how I met Tom Williams.
Sure.
I left the police a long time ago, and I never thought, my initial ambition in life was to be a police officer and to serve the public, but I was injured on duty after 5 years, and then left the service and started my own businesses. And the first thing I did, my first job really, was as a jeweler. After the police, I was working the jewellery business, so I had nothing to do with the financial industry really at all. And I was very fortunate. After starting several companies and selling them and being successful, I started a company that designed and built exhibition stands, basically exhibits all over the world. And it was through that I met with Tom, because my business partner, Richard Bednall, runs an internet company. And at the time, we were just launching a new product, and Tom and one of his customers had seen our website and felt that we were right to market his software. Now, when I first met Tom, of course, I didn't know anything. And we're talking 2001. I didn't know anything about the market. All I know is that I switched on the television, and there was a reporter saying, today the market collapsed, and then the next day, the market's gone up again. Next day, oh, it's gone down again. And I thought, what on earth is going on? Now, of course, being in authority, I know that the governments around the world have, like for instance in England, we have the Financial Services Authority. In America, you have the FTC, you have the NFA. But to me, the markets are regulated, so they can't be manipulated. But it was very early on in my teachings from Tom, and why I decided actually to buy the company from Tom. I actually own now all the intellectual property, the volume spread analysis method, was because I went and visited a city trader who shall remain nameless. He'd been in the city for about 25 years. He's a friend of mine, and I actually showed him the Tradeguider platform, the software with the signals that we have up, to call them indicators. And he said, well, what's this based on? I said, well, it's not based on any mathematical formulas like stochastic, moving average, MACD. Right. He immediately smiled. He said, well, that's good. He said, he said, so what's it based on? I said, it's based on volume and measuring volume, which actually looks at the imbalances of supply and demand in any time frame that you're looking at, 1 minute chart up to a weekly, monthly chart. It doesn't really matter. And the markets are moved by the universal law of supply and demand, cause and effect, and effort versus result. But, and this is the big but, Tom said to me, you've got to understand, Gavin, that price movement is caused. It's not an accident that a price moves in a direction. It's not just, it's actually done at certain times quite deliberately. Indeed, we're hearing about the Barclays story last year where they moved the LIBOR rate, and they came out and said, yeah, we manipulated it, and they admitted it.
Yep.
So this has been going on for years in all markets. Even gold has been manipulated. And what I teach people is this is not bad. This is just human nature.
Correct.
And it's very positive for a trader or investor who can read supply and demand, who can understand the chart and what the price bar is telling them, and then make an informed trading or investing decision based on that.
Correct. And how did Tradeguider come about? Was that something that you had started, or was that something that Tom had started originally and then you took over, or how did that all happen?
Well, it's a good question. We when I first met Tom, his business had been trading for around 20 years. So he'd already developed the software. He'd written a book called Master the Markets. So he was already well established. Unfortunately, however, Tom was getting old, and he was becoming blind. He has macular degeneration. So, of course, he was limited then to what he could do with charts.
Right.
And he was looking for someone to take the company and move it to the next level. And I know he'd met lots of people in his 20 years of trading who wanted to take the company, and none of them really ever got it off the ground. And when I took over, I was very fortunate. I had a very experienced business partner who was experienced in business and knew a little bit about software, which I didn't know much about. And it was actually when we took the business over, the software was called Wyckoff VSA.
Right.
And the company that ran it was called Genie Chartist. That was the name of the firm. But when I looked at the software and I read Tom's book, I sat and asked him some questions, and I said, Tom, is your software all about buy and sell signals? Because there's a lot of green ones, there's a lot of red ones. And he said, absolutely not. He said, it's not a buy and sell black box system at all. It's a method of teaching trader or investor that wants to learn how to recognize the footprints of what I call the smart money or the professional money. So I said, so what you're trying to achieve with your software and your book? What? He said, well, Gavin, I want to guide the trader through becoming successful. So, of course, that got me thinking. We needed a name for our company. We weren't going to call it the same thing.
Right.
And I was sitting at the table, around the table with the business partners at the time, and I just looked up and I went, let's look at Tradeguider, because that's what we do. And I typed it into Google to see if we could get the website. The website was available. A lot of websites weren't with the word trade in it.
Right.
And Tradeguider was born, and the company then developed some more software from Tom's original method, and we moved the software to version 3 and then version 4, and that's how the company was born. But if you'd said to me in my days as a policeman, well, Gavin, in 15, 20, 30 years' time, you'll be traveling the world doing seminars, you've written a book, and you'll be doing live trading sessions, and it's a dream come true. And in fact, I did live the American dream. There was an article written about that in Business Magazine, and it's interesting. They actually featured just how someone can go to America and actually live the dream. And I did it for 15 years, married an American, got 2 young children, and only recently did we move back to the New Forest National Park in England where I was born. So it has been a journey, and it's been I love it every day. You can probably tell I'm very passionate about what we teach and what we do, and I thoroughly enjoy it.
No, that's excellent. I always love to hear these kind of stories, Gavin, because having been born in America, it kind of gives us hope that there is such a thing as the American dream. It hasn't turned into the American nightmare, as some analysts and pundits would say today. And it's always very positive. It's very refreshing to hear these types of stories. It truly is.
I think the news and the media and what we hear about, I learned a long time ago that your experience of life is what you choose to experience. It's your choice. God gave us choices, and we all have them. And in my view, you create your own luck and you create your own reality. And if you spend all day watching CNN and CNBC and all the news channels, and I have to admit, my mother is one of those people who does it. And every time I ring her up, she says, "Well, Gavin, isn't the world a terrible place?" I said, "I'll tell you what, Mum, if you've been looking at CNN for 8 hours, you'd think the world was coming to an end." But they never actually broadcast good news. And Tom said this to me. He said the same with the stock market. There's no news in good news. It doesn't sell. Recently, in the BBC here in England, the Radio 5, they did a whole afternoon of good news, and people were ringing up. "Oh, we've just had a baby boy. Oh, so and so just got married. Oh, we've just bought a new house." It was so uplifting. Then
Right.
at 5 o'clock, when they went back, we said, well, now we've got to go back to problems in Russia, kidnapping. I mean, it was, and you can understand, human beings, as we are, we absorb all this information. And I'll show you later on how the information that you receive in the media and in the newspapers can be extremely misleading to you as an investor if you cannot read the chart correctly. And I'll show you that later.
That is very, very true. Very, very true. Because you see it even today. I mean, oftentimes, I mean, one of the things that I follow in the United States is the non-farm payroll numbers. They come out monthly. Okay. And one of the things I notice is there's always a particular reporter whose name I'm not going to mention, who probably sue the hell out of me. But he always seems to write about this all the time. Okay. And the irony of it is that you could kind of tell that this guy is biased towards always reporting something positive, even though in reality it really isn't. Okay. And then you kind of notice that after he does this and he creates these articles, the market seems to go up. Okay. And then, by, I guess, reality sets in or whatever. And then later on during the day, it'll just drop. And you just have to think to yourself, his timing couldn't be more accurate because he always does it at 8:35 a.m. Eastern time. It's like 5 minutes after the report comes out. So you have to know that he had something prepared. Okay. And you kind of wonder to yourself, I wonder whose payroll he's on. Those types of things. So you have to kind of figure that it's being manipulated in one way, shape, or form.
I think Jim Cramer summed it up very nicely in his YouTube video, which had gone viral back in 2006, where he describes how if he needed the price of a stock up or down, he'd call the bozo reporter and give him that video is available actually at the marketmanipulation.com website. It's very difficult to find, but it's there. And basically, what he's explaining there in that clip of his video is how he would use the reporters and the news desks and then talk to certain funds and dealing desks, and he'd basically place an order in the options market to confuse the actual cash market, and he would then put a story out about RIM or Microsoft or Apple, whatever it was, make sure that got reported to the general public, and then do the total opposite of what he knew everybody would be thinking. And that's exactly how the market operates. I'll show you an example in gold, where if you can read the chart, the safe haven of 2011 was the worst investment you'd ever have made. Yeah. If you can read the chart, it's right in front of you. The chart, we say, never lies.
Yeah, that's
chart never lies.
Very true. Very true. In fact, what I'm doing right now, Gavin, is I'm turning my controls over to you, such that you can take a look at some of these examples that you refer to. Okay, this is one on gold. Interesting.
You should be able to see here, CNBC.
Yep.
Headline back in August of 2011, is gold the only safe haven investment left? So let's have a look at that week when that happens. Okay, now this is August 2011. This is a Tradeguider chart. I'm using the real-time software, and these are what we call VSA indicators. Now, Nick, what do you notice? This is the bottom of the screen is volume, as you're obviously aware.
Correct.
What do you notice about the volume on the week that they report that it's the safe haven? And in fact, I'll show you something else which is quite interesting as well. On this particular week, we actually had a report come out. I believe it was from Goldman Sachs or several of the big investment banks, which basically said we think that gold is actually going to go up. Now, why do I keep all these news stories? You can probably see here, I've got a whole list of news stories that I follow. Well, the reason for that is it's always, well, the way I learnt to read the market was to actually look at the news that came out, and here's the example here. Goldman raises gold price forecasts, okay? So I look at what the news is inferring, and then I look at what the chart tells me, and I do the opposite to the, I mean, as Mark Twain once said, if you don't read the newspaper, you're uninformed. If you do read the newspaper, you're misinformed.
That's right, exactly, yes, exactly.
So here is the headline. Look at the date of the headline, August the 8th.
Oh, my God.
Goldman Sachs raises the gold price forecast. Now, everyone on television, all the analysts, gold is the safe haven, everyone. The stock market is in turmoil. The stock market is collapsing today. We've heard that the US government has been downgraded this week.
Correct, yes, I remember that.
We are telling you that the exchanges are telling us that everyone's selling their stocks and they're rushing to gold. That's what you would have heard, if you remember.
Yes, I do, Paul. Yep.
But look at this. This is what we call a climactic bar. It's a weekly chart of gold futures.
Right.
Sign of weakness 1, potential buying climax. And look at what happened to the price. If you bought gold in the safe haven in August, and here's the trouble human beings and traders and investors have. After you see that the news is inferring gold's a safe haven, it goes up for a couple of weeks.
Sure.
So you see that, you think, oh, crikey, the banks are helping us here. That's very kind of them. They're telling us to get safe. But who do you think is selling gold at this part? Now, look at the date there, Nick, 12th of August, okay, 2011. Now, the stock market on that week was apparently your worst investment.
Correct.
But, as I'm about to show you, it would have been your best investment. Look at this chart. And here is one of my favourite signals in VSA, which you'll learn all about. It's a shakeout in the market. And look at where we've gone. And as I'm talking to you today and we're filming this interview, we're trading at record highs.
Correct.
And had you bought here, which no one else teaches you this, very few people teach this, because it's contrarian. It's a contrarian view.
It is.
But once you understand volume spread analysis and the Tradeguider method, you will learn to become contrarian. And that's how you make money in the market. Be contrarian, understand the chart, and look at the volume on this down bar. The price has fallen. Someone here's buying, and over here, in November, they do what we call test the market, no supply test. And you'll notice that every indicator, Tom Williams, the man that invented this, has written a description in the indicator box as to what's actually happening. He tells us. He talks to you. And that's how I learn. And that's how all our customers have learned. They read the boxes. They look and say, what do we want to look for in the background? It tells you what to look for. And it tells you here, following no supply, expect higher prices. Well, it's a weekly chart. And the signals are very intuitive. And that's really the purpose of what VSA is. It's to enable the trader or investor to understand the language of the chart. Because the chart is a language, Nick. It's a bit like, learning French, Italian, German, Spanish. Any of those languages, they're a language. You've got to understand the differences between them. And the chart that you're looking at here, it's a language, and it talks to you. And once you read it, and you look at the news, and you look at what the chart is telling you, you most often know that the chart doesn't lie. One quick example, which you'll be familiar with. Do you remember in 2010, there was a Gulf of Mexico oil spill crisis?
Oh, yeah, sure,
and the
BP.
company that was BP. I have to admit, I wasn't particularly proud to be British when I was living in America.
That's right.
But the chart doesn't lie. Now, this may sound contrarian, but if you look at the chart, on the day that they said, or the week they said, we can't cap the well, we're in serious financial trouble. Look at the volume that came in those 2 weeks. This is where they said, we got 3 green signals at the bottom there. Now, when I looked at the chart, I was actually in Boston speaking at MIT to the Boston Traders Group, and I remember them, I showed the chart, and they said, is there anything you think of buying right now, Gavin? I said, well, I'm actually really looking at BP. And they all fell about laughing. All of them, everyone. They thought I was joking. They thought it was British humour.
Right.
I said, guys, Tom Williams rung me yesterday, and on the daily chart, we had what we call bag holding, which is a narrow spread bar, massive volume. What was going on was someone knew something that the public didn't.
Right.
And as the price collapsed on this bad news, I even heard one story on one major news channel that Colonel Gaddafi of Libya was taking over BP. I mean, that's how ridiculous it is. No, seriously, and people believe it because it's on television. They go, oh, I believe that. But actually, the truth that actually we know now that at some point in the future they did cap the well, and we know that someone was aware of what was going on because of the volume. So that's all I look at. The volume, the chart doesn't lie. And look, BP was trading down a low of 29 down here, even lower down here. It traded all the way down to all the way down to 26. Look at where we are today.
Yeah.
Now, had you bought it, someone says to me, I was in a seminar the other day, so you're saying, Gavin, we can actually find market tops and bottoms? Absolutely.
Yeah.
If you read volume. Absolutely. So there it is. Great example for you.
Yeah, no, excellent example. Excellent example. Now, Tradeguider itself, in terms of the solution, VSA. I mean, I've seen you do like webinars, etc., using futures, also using stocks, etc. What about forex? Does it work fairly well with the forex market as well?
Great question. And most forex there's a big thread on Forex Factory about volume and forex, and you can't get it, so you can't use it. It's nonsense.
Right.
I'll prove it to you now. Because if we go and let's take a look at today, a trade we actually took in the live trading room this morning. So I'm going to show you a chart of, we'll start with the Aussie dollar, because that's got a setup happening on it actually right while we speak. Now I'm going to put up a chart of the hourly chart, okay, of the Australian dollar. Now this is a currency futures contract, right? So I'm not looking at the spot forex at all. I'm looking at the exchange traded volume on the currency pair, Australian dollar, US dollar, and you'll see, like I can see, massive volume down here with a big green signal on it on the hourly chart, which came in last week. I sent a trade alert out on this because I could see down there you've got what we call stopping volume. That's where the market clearly is telling me professional money are buying into this particular contract. Now, I was interviewed by a newspaper in Poland about Forex only a few days ago, and I said, look, have a look at this bar here, and if you look at it carefully, you will see we close off the low, and the next bar closes higher. If you got close to it, you could see that. But I just want to show you now, I'm going to put now the same contract up, but using what we call tick volume. All right, so this has now got no exchange traded volume. I've got 200 interbank feeds being pumped through my eSignal account, which is GTIS is the data feed. But you can also get volume data from MT4. Most good providers provide tick volume for Forex.
Sure.
And now what I'll do is I'll show you, when you put the two together, you put the Aussie dollar, okay, and let's just make sure that's come in, and then we'll put 200 bars up. Now what I'm going to do, I'm going to put 400 bars up here, and I'm going to put the two charts together for you. Now, look at the volume from the exchange here, okay, and look at the volume at the same time over here. That's tick volume, that's exchange traded volume, same setup, same movement. Now that is, you see that prices are ticking slightly differently because this is the spot forex contract, that is the exchange traded contract. Nick, that proves, excuse my police statement here, beyond reasonable doubt, you can absolutely use tick volume and volume spread analysis as a Forex trader. And that's one of the biggest misconceptions in the market. And if you can get that out there and show people this, a lot of them won't believe it initially. They say, oh, well, no, we don't use volume at all in Forex. But that proves that when professional money, and I'm talking about the smart money, move into the futures contract, they move into the spot market exactly the same time.
That's true.
And traders who use VSA, this is a little trick that I use, they move into the spot forex market slightly before the futures, only 3 or 4 seconds. If you're quick enough, in a small time frame, you can actually gain an edge by looking at the two charts together. Because you'll see the spot moving, and if this one starts to move rapidly up, get long on the futures contract, which is what I do. One of the strategies that I teach people. But those two charts you can see, massive volume. Look at the massive volume at exactly the same time within an hour. And these are the hourly charts that I'm showing you. So that question that I'm asked, the best way to prove it is to show these charts like this. And every contract pair that I show you, the Japanese yen, any of them, you'll see the same thing happen.
So in essence, the forex market and the futures market are, for I guess lack of a better word, correlated to a certain degree. They're
arbitrage, yeah. It's arbitrage trade. They have to move in the same direction. So if you're looking at some of the currency pairs are inversed, for instance, like if you're long futures in the Japanese yen, you'd be short spot forex because the pairs are inversed. But there's not many. There's a few of them that do that. But overall, I mean, the British pound, the euro, they all. If you see very high volume on the futures contract, you guarantee absolutely 100%. That in the spot forex market, the banks, and that's what you're charting here. You're charting. The forex market is the biggest market in the world. It's traded. Trillions of dollars are traded every week, and it's the big institutional banks. But you've also got big funds like the Quantum Fund run by George Soros. There are many funds you'll never know about. Who trade billions of dollars, and when they put their footprint, I call it the elephant print in the market. you know, all I'm looking for after the footprint,
Mm-hmm.
I'm trading in the shadow, which means I'm looking for trades as the market reacts to the volume.
Mm-hmm.
And if you see, and I'll show you on this chart here on the spot forex market, there's the massive volume bar. What we teach people is to say, wait for the market to test that level, which is what's going on here on these bars here. You can see we've got a test, and then wait for the diamonds, which is our trending system, which is not based on a mathematical formula, to actually show us that the market's what we call changing behaviour. It's going up because what happened there. But the two rules that everyone should understand about the markets, that strength or buying happens on down bars. That's a price bar that closes lower than the bar behind it. And selling, in fact, happens on up bars.
Yeah, that's right.
Over here. So that's the, once you understand that, makes total sense. You buy low and you sell high. You know,
there you go.
we can actually see over here, you know, you had some weakness on this bar. You can see no demand, the market drifts up, we have a test, and then bang, because of this bar here, the market's now changing behaviour. And we're watching it. And, you know, it's doing exactly the same thing in the futures contract.
That's correct.
It's even got two indicators right at the top. And that's how it works. It's really not complicated at all once you understand it.
Interesting.
Most traders are using MACD, stochastics, trying to curve fit
Right.
the system to the market, and the market will never ever work that way. You can't curve fit a system to the market. All looks great in hindsight, but this signal came in our live trading room earlier on. You know, and you can see what the market's doing live. It's basically what's there.
Now, in recent years, Gavin, there's been this advent of HFT or high frequency trading. Okay, a lot has been talked about it. A lot of folks have discussed it. A lot of folks have talked about it. God knows how many articles have been written about it, etc. And now, recently, the U.S. government is, is claiming. I don't know if they're claiming market manipulation, but they're basically stating that, a very select group of the algo traders or quant traders, or high-frequency traders, if you will, or attempting to corner the market, etc. What are your thoughts regarding, high-frequency trading?
Well, I've just done a seminar called Trading in Harmony with the Flash Boys. And look, again, if you go back to 1980, 81, the Hunt brothers managed to corner the silver market, not with high-frequency trading, just through sheer size, and because they knew the way the market worked. Now, it's interesting when you look at a chart of silver. Silver's never traded since 1980 above $50.
Correct.
Now, someone said, don't be silly, Gavin. Yes, it has. You can't tell me that silver was $50 in 1980, and now silver's, should be trading at $180, $190.
Nope.
I said, but it never has. It's never gone above 50. That's a fact. And this audience I was presenting to just looked at me like I was some madman. I said, don't be, because they're thinking about inflation. They're saying, if silver in 1980 was at 50, surely in 2014 it should be traded at, and I said, but no, the market's been manipulated, it's been squashed. And if you go and look at a chart of silver, you'll see clearly the high frequency trading at work. And again, what I look for, before the high frequency trades happen, they're often positioning themselves in the market before the big move, like they did in May, when they did the flash crash in 2010, or I think it's 2010, the big flash crash then.
Yep.
You can see that. So if I show you a chart of, let's look at silver, for instance, and we'll use the SLV, we'll use the ETF of silver.
Okay.
Now, what is very interesting, right, is the silver and gold markets are probably the most manipulated and controlled. And, I've got plenty of evidence of that, and I've got an article I could show you here, which even the British newspapers have actually come out and spotted this. But this is high-frequency trading here. Okay, and I'm going to show you the weekly chart of silver. Now, look, we go up to the 1981 high of silver. But, the week before the high-frequency trades hit, which was to knock the price down, they were already being positioned the week before. Look at the volume on the week before. Now, does that not stand out to you? I call this affectionately Yao Ming bar. Because if you imagine, Nick, that all of these bars at the bottom are human beings. This is how Tom explained it to me. And he said, imagine, Gavin, that you're walking down Chicago very early in the morning, and an alien from outer space lands next to you, never seen a human being, and he's got a list of questions, and his first question is, Gavin, how tall are you? Right? And there's no one else around. And I'll say to him, well, I'm 6'2", so I am, and he'll look at me, this alien, and will say, don't have a clue what you're talking about. He's got nothing to compare me to.
Right.
But let's now say that my daughter, let's say that's Gavin there, look, 6'2", on this bar.
Mm-hmm.
Let's say my daughter Olivia then turns up. She's about 3 feet, so she'd probably be somewhere down there. That would be in the Olivia bar.
Right.
And then walking down the other end of the Chicago street that I'm on is Yao Ming, who's actually one of the tallest people you'd ever meet. That and that, those two bars there, would be 7'6", 8 foot human beings.
Oh
they
my
would
God.
stand out from the crowd. They would.
Yeah.
It's a warning signal for professional money that they're doing something. Now, I want you to look very carefully at this price bar, and you'll notice that the range of the bar gets narrower as we approach a 1980 high. So the chances of it going through there, but because we've been in an uptrend, anyone using stochastics, MACDs, moving averages here, will be getting buy signals up here.
Right.
We've got that same signal I showed you in gold here on silver in April of 2011. But the high-frequency traders are positioning themselves the week before, knowing that the sell orders here and the buy orders that have come in, they're selling into. And then suddenly you get these massive volume bars. And that's a mixture of high-frequency trades. It's going to be normal hedge funds trading. The only advantage that the high-frequency traders have is speed. So they're trying to gain an edge in the market by using speed to put in millions of orders at a time. Now, the only trouble that has for them is it leaves a footprint on the chart. And the footprint is in the volume. They have to report the volume if they're traded on the exchange. So if they put 10 million orders in, you're going to get, or in this case, 1.7 billion on that week. You're going to get a footprint. But what we then look for is we look for what we call confirmation signals, confirming that the market's now turned weak. There it is. No demand. In upthrust, where we're trading today in silver, and it's going to go lower. So this is what we talk about. I don't get into the conspiracy theory of why do they have high-frequency trading, who are they. If you want all that, read the book called Flashpoints. Right. What I'm more interested in is making money in the market by reading the chart. And as Tom said to me, when he read the article, I read in a very brief clip of the book Flash Boys. And Tom just looked, he said, well, he said, if we had high-frequency computers in my day, Gavin, we'd have done the same thing. Yeah. We're professional traders. We don't care about anyone else. I mean, Tom retired at 40, a millionaire, a multi-millionaire. He doesn't. So he said that's what it's. You know, life is a giant competition, and if they can get an edge, any edge they can in the market, they use that edge. Just the same as if I came to you and said, Nick, look, I found the edge. I've got the black box. Let's put in a couple of million. Let's try trading it. And if it starts working, like the edge for them is it manipulation? Potentially. And I think that the CFTC and some of the regulatory bodies don't really understand it, and they're trying to find out what the hell is going on because, you know, but the exchanges understand it. They know what's going on. Sure. But is this bad for the market? No. It creates the volatility. It creates the trends. It creates the movements. So I said to someone was complaining to me the other day about it. I said, listen, get over it. It's happening. Trade in harmony with it. Make money with it because you can, and find the footprints on the chart, which will teach you, which give you the setups, which will enable you to make the money. Simple as that.
Well, and in reality, Gavin, if you think about it, they are in effect leaving behind the footprint, or as you mentioned, the elephant walk, if you will, or the elephant footprint, such that if you're a savvy trader, you can follow it. I mean, you could see it, you can see where it's happening, when it's happening, etc., and potentially capitalize on it.
You just mentioned the word savvy trader. Do you know how many people out there have not got a clue, don't even read volume? I mean, we're talking, I'd say, of the people who come to our seminars initially for the first time, most of them, at the first time they listen, even though I show them it on a chart, are so staggered that they've been buying these tops and losing money. Yeah. And they want to resist the fact that this is the truth. But this is the way the markets have always been. And in fact, everything I'm showing you today is all based on the teachings of a guy, and you might have heard of him, called Richard DeMille Wyckoff. Have you heard of Wyckoff?
Absolutely. Yeah. Absolutely.
It's ironic. It's ironic. There was an article in the Business Insider magazine last year. It was a very interesting article. They call it, this is exactly what we teach you. It's the secret trading strategy from the 1930s that the hedge fund want you to know about. Well, they don't want the retail trader to know all of this because it takes away an edge, the advantage that they have. But if you actually read this article, which is a very good article, It says in here, in his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, A Course of Instruction in Stock Market Science and Technique. It's out of print, somewhat difficult to find these days. In fact, it's on my shelf here. But even in 2013, hedge fund managers still swear by it. And many fund managers actually use our software. And it says, one of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time you see that unfolding on the screen before his or her own eyes, he or she can react accordingly. This is the way the markets have always worked. And in the 1930s, if Wyckoff had a computer or had access to one, he would have done what Tom Williams has done. He would have programmed in the setups and the indicators to warn the general public when they're being groomed for a con, when they're buying tops or selling bottoms. And that's exactly what we do. That's great. That's why I love what I do, because people wake up. And that's the most important thing.
It's interesting because I think that you had a book out at one point. I think it was called A Game on Wall Street.
Yes.
Which is I believe is pretty much the Wyckoff method, if you will, in terms of following these tops and bottoms, etc., and being able to capitalize on them. It is very interesting because I happen to think that probably 90-95% of the traders, don't make money because they buy into the news, they buy into the tops, if you will, and I think that is, if you think back a generation ago, let's go back to, let's say, the 1980s, right? I started trading in 1992, and I started with futures contracts, but not the markets, not the indices, etc. I was trading back then. I was trading things like cotton, pork bellies, sugar, etc. And in those days, there was no internet. You had to use a broker. And what we used to do in those days, we used to get a copy of either the Wall Street Journal or Investors Business Daily, and we had to create our own charts. We had to manually create our own charts and mark down where that particular commodity went, the previous day, okay, and then kind of figure out how much money did we make or didn't make that particular day. I mean, that's kind of what it was back then. But there was no real computers, but the markets themselves, because we didn't really have an internet and things didn't flow in nanoseconds as they do today. What people would do is they would hear a story on a Monday, they would listen to it, and then all of a sudden, they'd read about it in the very next day in the Wall Street Journal, and then all of a sudden, oh, gold's a safe haven, let's buy gold. And then all of a sudden, for 2 or 3 days afterwards, you see volume gold, people buying gold. Why? Because it took a certain amount of time before the general public could react to it, because we didn't have a way and means of doing it as we do today in nanoseconds. Because today, everything moves at the speed of light. And in those days, people would have to kind of absorb it mentally, etc., and then, try and make an educated decision, if you will. Inevitably, because they were reading the news, they were probably reading something that was going to cost them money down the road. But that's kind of what my take is, regarding, what used to happen back then. Because again, we didn't have the internet, we didn't have a way and means of reacting to anything in a very rapid basis. Now, if bad news comes out, the market will drop like a rock. I mean, in seconds, But back then,
there's a story here in England, actually, which is in the news this week, about a company in New York which put a tweet out about a UK stock price and knocked £1 billion off it in the space of a day.
God.
Because of a false rumour.
Right. Oh.
So that's the way the market works, and it's the way it will always work, and it's not going to change. I mean, the market's only going to get more efficient and faster as more technologies come out. It won't be long before you'll be walking down the street with your smartphone, placing trades off the smartphone. It's happening now. It can be done. I've got an alert service where I'm walking around the supermarket, doing my shopping, and my phone sends me an email alert telling me a setup has appeared based on a VSA principle, like the one I showed you in silver there, and immediately I can ring my broker and within seconds be in the market, and I don't even have to be sitting at my desk. Wow. I mean, that's where we're going. I think the market has become a very exciting place to trade, As long as people understand risk management and capital preservation, which a lot of people don't understand, once you understand that, I believe you can be very successful in these markets if you can read the charts. Well, I know it because we've got a lot of people who've, customers of ours, who've won competitions and are making money full-time as traders. So it can be done, but it takes time and it takes a bit of effort, and a lot of people, unfortunately, don't want to put the effort in. They just want to use a black box and churn out cash. That's when they start losing their cars, their houses and everything, because they, and I've heard of horror stories, because they don't want to do the initial work that's required. But if you do it, you can be successful, in my opinion.
No, I agree with you wholeheartedly, Gavin. I mean, most folks out there, you know, they look for the magic bullet, you know, the holy grail, and you know, I've said it even in my own site, Market Tea Leaves. And look, if you're looking for the holy grail, if you're looking for, you know, the silver bullet, etc., let me just stop you right here. You know, I've been looking for 20 years. I haven't found it yet. You know, it takes it takes quite a bit of effort, as you say. It takes reading, it takes the work, it takes studying it, etc. You know, to understand, you know, what will happen, what will the markets do in a certain or given situation, etc. And that's not something you learn in 5 minutes. Unfortunately, today, I think that a lot of folks are more in tune to the idea of, well, you know, I can't figure this out, so let me just apply to a service that's going to give me the daily call of what I have to buy and sell, you know, where to get in, where to get out, you know, etc. And that's really all they're looking for, because they don't really want to do, as you say, the effort, put forth the work, etc. I've known people who've gone to dire straits doing the exact same thing too. You know, I've known of people that you know had a fantastic lifestyle, etc. And then all of a sudden, you know, they didn't, you know, because they either ignored their own trading rules, or they violated their own trading plan, or they did things that were, you know, ridiculous, for lack of a better term. Yeah. In terms of the future, do you see the future of trading, you know, going into more like the smartphone, the smartphone scenario that you discussed earlier, or do you also think things like auto trading have a place as well for the future of trading?
It's interesting you should ask that question today. We're in the process of building a system based on volume spread analysis that automatically will take trades. That's not far away, so I think that will come. And I do think that the day will come in the next 5 years where we'll have smartphone technology that will allow us to trade from the charts. In fact, we're developing a piece of software that will do that. I think there's a big market for an alert service, and we developed one called tradingthemarkets.com, which was, and it's our most subscribed to service. So what you just said is correct. People don't want to do the hard work. And, you know, I realized a long time ago that we needed to have the ability. We know these trade setups work. We see them all the time. And there has to be, you know, but we always teach people, you know, you can't give 20 human beings and traders exactly the same setup with exactly the same stop. Right. And the reason you can't is one of them's got a 10 million in an account, the other's trading on a $500 forex. You know, right? Seriously, no, I've actually got this example that actually happened to me, where I've got over 100 people in our live trading room, and 2 or 3 of the guys are fund managers. They're trading like 30, 40 million. I mean, trading a lot of money. Sure. And I've got other guys in there who are ringing me up, and I talk to them. I say, how much are you trading? He said, well, I managed to scrape together $500, and now I'm trading the forex market, Gavin, and I want to be a millionaire. And I'm like, good luck. Yeah, exactly. You want to, I'll save you your 500, put it in a bank and put interest on it, because that's not the way you're going to do it. Yeah. So realistically, you know, when you send out an alert, or we send out an alert, we send out the principle right here at buying climax. That's telling you something. Then we teach the individual investor or trader to go and measure the risk, look at their account size, make sure they don't risk any more than 2.5% of the capital in any one position anyway, at 2.5% maximum. And then, if the trade runs in their favour using trailing stops, we say lock the profit in so you're at break even as quickly as you can without getting stopped out. And there's a way we have a thing in the software which actually allows us to measure where we put a stop. In this instance, it's called a chandelier stop, which you can see here. And then we have these little H's, which allow us to show, I'm not going to explain them all, but they basically give us an idea where we should be putting stops, and then when the market goes in your favour, where you should lock in profit on the way down. Because the whole idea of being a successful trader is, point one, get to break even on a stop. And I always use stops. So some people don't. I always use a stop loss.
Yeah, happy.
Number two, when the market does make the move in your favour, lock in some profit so you're taking something from the market, even if it's $50.
Yeah,
It doesn't matter. I'm always grateful whether I take
absolutely.
$5.50 or 5,000. It's just grateful for what I've got and then manage the risk through. And if you happen to get lucky and catch a really good running trade, which you can in currencies, so I love trading the currency futures market, you can catch really good trends. And if you use a decent stop, you can actually stay in the trade for the whole week. And at the end of the week, you know, some of the positions have been very, very profitable. And at the end of the day, if you get stopped out, which sometimes you're going to, your risk can be limited because you can use tight stops in the currencies if you know where to put them. So it's all about risk reward. And if you know where you know how to manage risk, and you know where the reward is, I believe you can earn a very nice. Well, I know you can earn a very nice living from trading and investing for sure. For sure.
Sure, without a doubt, without a doubt. I mean, it all comes down to it really all comes down to a trading plan with trading rules, etc. Kind of the same thing I tell my folks to, you know, stick to your plan. You know, stick to it. And if you get a win out of the market, you know, don't complain to me after the fact that, oh, if I would have stayed in a little longer, I would have made more money. I mean, basically, you know, if you made money that day, believe me, it was a good day.
Correct. Correct. Everything looks great in hindsight. Of course it does.
Of course.
But I was taught by Tom to know that whatever you see in hindsight must have been there in foresight because the signals appear on the bars.
Yeah.
But would you have been tuned up, for instance, as a human being and a trader, to start buying stocks when everyone around you is telling you the stock market's collapsing?
Yeah, exactly.
And when everyone's telling you to get long gold and you see gold go up the next week, would you be thinking of shorting it? And there's a short setup coming? Well, once you understand VSA, volume spread analysis, that's exactly how you'll think, and then you'll start to succeed because you will be trading against what we call the herd.
No, exactly.
And the herd is the group of individuals that will always do the same thing, regardless of what you teach them. They'll always do the same thing, and they'll lose money consistently. And that's what makes the market work. The market has to have losers.
Yeah.
Believe it or not, that's just the way it has to be that way. But rest assured, you can be successful in the market. And you're right. You mentioned trading plan. I have a 10-page trading plan, and I think it's absolutely vital, and I stick to it. And that keeps me out of trouble and keeps me profitable.
Absolutely, absolutely, without question, without question. Well, from my end, Gavin, I mean that's pretty much all I had on my end. I'd like to thank you very much for your time. I mean, I think this is very thoughtful, very thought-provoking, very insightful. You know, clearly you and Tom have come up with a methodology of how to make market manipulation work to a trader's advantage, which, you know, I think is good. I mean, I think it's high time that, you know, the traders who are out there who really want to succeed, who really want to put forth the efforts, etc., you know, have something like, you know, Tradeguider and VSA and books to read, etc., so that they can do the work that they need to do, you know, to get them up to speed, etc. I mean, I think that's I think it's very innovative approach, and I'd like to thank you very much.
And just so you know, we want to work with you because of your work as well, because, you know, we haven't talked today about the correlation of charts, but that's actually quite important, because if you're going to get turning points on charts, you're going to see the volume come in, and that's where, when you're looking at the market tea leaves each morning, you look at what the market's telling you, where it's likely to go.
Exactly, yeah.
I'm able to look at my chart and say, you know something, Nick, you said the market was going to go up today. You said, yeah, it's got an upward bias. I'm going to go and look at the chart and say, you know something, I totally agree with you, because we're in an uptrend. And only during this interview, in fact, we actually had an indicator come in telling me that the market is going to go higher, which is wrong. And so I would use what is in the newsletter, look at the VSA, for instance, and say, yeah, totally agree. And and that's what I always think in trading. Two minds are better than one. And if you can get good information, good sources, and you learn to trust those sources, then you read the chart, look at where the markets are correlating, where, for instance, gold should become weak at a certain point when the S&P rallies.
Sure.
If you see the print there, that's how you trade it. So no, congratulations to you, Nick, as well. I think, and Tom and I certainly endorse your work. We think it's very good indeed.
Well, I thank you very much for that, Gavin, because the fact of the matter is, you know, I get up at 4 a.m. my time, you know, to basically, you know, take a look at what was going on in Asia, take a look at what's going on in Europe, you know, take a look at the charts, you know, check, double check, triple check, you know, before I come up with a bias, etc. And hearing that from you It's very heartwarming. I can tell you that. I appreciate it.
Well, you put a lot of effort into it, and that's pretty obvious. And also, you know, something, I get up at exactly the same time as you every day.
Mm-hmm.
But for me, it's at 9
Your
o'clock
time.
in the morning. So I've had a full night's sleep. I'm getting up for the London Open. I have the benefit of when I lived in Chicago, it just wasn't very conducive to my time scales. But here now I can trade. The only thing I did used to trade used to be the Asian session. But now I mainly trade the London Open and the US Open, and that's it. Those two, and then I pack up for the day because that's where the money's made.
There you go.
There you go. All right, brilliant. Okay, well, nice to talk to you. And again, I hope for all of you listening to this interview, it benefits you and you learn something. So thank you very much indeed, Nick. Appreciate it.
Thank you. All right.